You are watching Trading Day. We are watching oil prices minute by minute start to fall a little bit here. They're down about 2% as a group, as Al Jazeera is reporting that Qatar's foreign ministry spokesperson says that Israel has agreed to a ceasefire proposal while Hamas gives its initial positive confirmation. This is according to reports from Al Jazeera. But as that news came out, you did see oil prices move lower. Oil prices have notched their first monthly gain in some time. And part of that had been that geopolitical tension that had put a bid under oil prices as the war spread beyond Israel and Gaza. Let's bring in Grant White, who's been joining me on the desk with IA Private Wealth. Grant, I know you have looked at these energy stocks for different reasons because they've been cheap and the oil price is supportive. If we do get the geopolitical bid outside of the oil price, are you worried about weakness in crude?
Not overly. I'm not overly worried. I mean, I think that, anytime you're dealing with, producers that rely on commodity prices, you need to be obviously aware of like where those lines are. With anything that we own, which is particularly Canadian companies, we're not overly worried about crude prices dropping. They'd have to drop much more significant amounts for us to start to even worry, to be quite honest. And so the recent events are not creating a worry for us at this point. We believe that our companies, in particular, whether it's Canadian Natural Resources or Whitecap in particular, we believe that they're going to remain strong. We're going to remain profitable. Dividends are safe, and so we're not seeing too much pressure on that right now.
Remind me about your approach to these energy stocks. You mentioned some names. Recently, they failed to capture some of the upside momentum in crude oil prices. Are you still looking at them as sort of value plays, cash flow plays?
A little bit more cash flow these days than it was than a value play in our minds. We bought into them originally because of the value play, though. We believe that they had a lot of upside when we started buying them a number of years back. And now we're more in a holding pattern. We still like the cash flow we're getting off of them, especially compared to our original investment. And so it's not the main purpose of why we got into them in the first place. But, we wanted to be in the space. And I think that if you want to be in energy, we love supporting Canadian companies that are contributing to areas of especially relates to climate change, whether it's carbon recapture technologies and things like that. And I think if you're interested in creating a greener world, but you also believe that oil is going to be part of the story for time to come, then Canadian companies are really well positioned for that. And it's one of the reasons we like them so much.
That's one part of the portfolio. A huge part of the market, of course, is the tech sector. There's no escaping it. How do you think about the role that tech is playing in your portfolio right now as we stand ahead of more major earnings today after the close?
More challenging managing capital gains in the last couple of years, frankly, which is a good problem to have. But, I think that from a technology perspective, we're very interested to see how reports shake out today. I mean, we've got Amazon, Apple, and Meta reporting. And I think there's a lot of interesting news that's going to come out of those for all three of those companies and what that means in the short term. But I think that what investors really need to be considering is that, we've seen these large companies rise over the last 20 years and they've really, deviated from the traditional factors that might have shown to outperform in markets. I mean, we've got very large companies continuing to grow at incredible rates. The value story has not been there for 20 years, around 20 years in any case, as these companies continue to outperform. And so I think that where investors need to be looking for the next 20 years is looking at alternatives, still in the tech space, but I think there's a lot of great opportunities, just smaller than the more traditional names. But in saying that, I'm excited to see how things shake out today.
What's an example of a kind of a smaller, more under the radar name?
Well, I think with Amazon reporting, I actually really love our position in Mercado Libre, which, wouldn't be a typical normal name that you see in most portfolios, I think, in Canada. But the reason we love it is it's obviously a very similar business to Amazon, especially with it relates to e-commerce. But, given their dominance in Latin America and actually just proven to be the number one player in that space in e-commerce ahead of Amazon, we love the moats that they have, whether it's logistics moats, which is very very similar to what you'd see here in North America with Amazon. And at the same time, we think that the growth story is just more there. They have much more growth upside as compared to Amazon. And so, if you like the Amazon story, I think you should really like the Mercado Libre story. And I think there's just a lot more runway ahead of it. And we've seen that over the last year. But I think there's a number of years yet to go in that story, especially as they get into things like fintech and other expansion opportunities.
How do you think about Shopify, which definitely plays in that realm? It's weaker today. There's industry data showing that there perhaps was a slowdown of payment volume on Shopify, which explains why it's down today. But it has started to lag a little bit, the broader tech group.
Yeah, I mean, I like Shopify as a whole. I mean, I love the company from what it does. The challenge we've had for Shopify since the beginning has frankly been price. I think that even today, even after pullbacks, it's still it's trading too expensively for us to make a meaningful step forward into it. Whereas we're still seeing just better price opportunities in other places, other parts of the world. It's not to take away from Shopify's business, though. I actually think there's a lot to like about the business. We just need a better entry point if we were to consider it. I do think that strategic partnerships with Shopify are going to be potentially interesting going forward, whether that be with Amazon or other companies. But just for right now, it's just on a price that we're willing to pay, even despite the fact that we think it's a pretty good company.